it might be good to get out of the way, the Balaji bet. He cut that early. And so unfortunately, I feel like I was very excited to, I think there was supposed to be at least a month left of that bet, Bitcoin to $1 million in 90 days. And so I was excited to see, what would happen. Did I think it was going to a million? Probably not, but I, was curious to see where it would go. But so he ended the bet early. He gave, I think it was like 500,000 to the guy. And then maybe they came to an agreement because the guy was, I was following his Twitter. He was planning on donating like at least half of it anyway. And so then he gave 500,000 to give directly. And then he gave another 500,000. I'm not sure where. Oh, Bitcoin Core, the development team that kind of runs Bitcoin. And so, yeah, so I don't know how you guys feel about him ending things early. I think a lot of the things banks are continuing to fail, which was his original point. So we'll see how things continue to pan out. But I don't know. You guys have any thoughts on Balaji?
If you've been listening to Balaji long enough, you shouldn't be surprised by this. I've heard him on good authority in the bull market. He said it when he was on one of Tim Ferriss's podcasts. He said that if he had $1 million today, he would invest half of it in Bitcoin and half of it in Ethereum at the top of the bull market, which would have really not looked great. So Balaji as investment advice, I don't know if I would necessarily take his advice, but I do appreciate his philosophy and his ideas that he is pushing out there. It's definitely fresh perspective. I do think it is a part of that technological utopianism that we kind of dispelled a couple episodes ago, but he still has some really good ideas, and we would be foolish not to at least listen to some of those. I mean, he, like you said, he called the bank failures, but the Bitcoin to $1 million was a little rich even for my blood, and I was just like, man, like that would be interesting if that was the case. So, yeah. I don't know,
I
Connor,
think we all
what
knew
your
it was
thoughts
like
are.
something of a not, I wouldn't call it like a marketing stunt, but it was a little bit of that, like grab attention kind of stunt. So we all knew that. I think where he shot himself in the foot, and I forget which podcast he went on, but he basically said as much because people were claiming that for a while, and he was kind of not saying anything about it. So I think as soon as that happened, it kind of dispelled like all the magic of the bet a little bit. So not that anything would have been different, but I don't know. I think a lot of prophecies, in some respects, especially market prophecies, are kind of self-fulfilling.
Yeah.
But I do appreciate he put his money on the line, and he was calling attention to what is a very real problem. I mean, I was just looking historically right now, and you look at like the 7 largest bank failures in history, and 3 of them were this year. So
Yeah.
like you only have 2 bank failures that make the list from 2008, and you have 3 in 2023. I mean, that's
Wild.
crazy.
Yeah. I do think Balaji also said as much in his, he kind of clarified in that video where he was talking about closing out the bet that he said he burned $1 million, his line, his motto was I burned $1 million because they're printing trillions, like again, he did, he spent the money to advertise what he was talking about. But yeah, so banking failures, wild to see, a few banking failures. We've talked about them before, right? And then somewhat recently, First Republic Bank, which, even when, I don't know, I thought even when, Signature, Silvergate and Silicon Valley all were falling, people were like predicting First Republic would be next. And it took a minute, right? But that one, got bought out by JP Morgan Chase. And then, I don't know. I've been seeing, there's a number of who tweeted it. I'm gonna pull up the tweet. Mario Knopfel. I don't know how to say his last name, and I feel bad. But
Sure.
you
Oh
guys know who
yeah,
I'm talking about?
Mario. Yep.
Hmm.
Yep. He tweeted out. I think this was yesterday actually. He said 130 regional bank stocks are down more than 5% today, and then the ones that were down the most, you had PacWest. was down like 51%. Western Alliance was down almost 40%. And I think rumors were coming out about, I don't know if it was one or both of those. I'm so bad with names. That's why I had to pull up this tweet. But I think there were one or both of those were like seeking a buyer. And so I don't know, just kind of wild to see. I don't know. Have you guys seen any
Well,
other? Oh, go on. Go
I
ahead.
can't say I've seen like names of other banks that are failing,
Sure.
but I know the problem is, and maybe one of you guys can explain this a little better. It's like one of those things where it's like, oh, I got it, and then wait, like how's that work again? But it really is the Fed killing the banks. Whether or not the banks have responsibility for taking on too much risk is one thing, but the fact is, like with the way interest rates have been rising, they now have competition from more liquid investment houses. And that's probably not the right way of saying that. But basically, these investment houses can keep up with the changing Fed rates and offer competitive rates that people are then moving their assets from the banks to these houses and causing basically these bank failures because the banks can't do it. So,
Yeah, I mean, like I'm looking at some of these bank stocks that I follow, Matt, and the good ones are up significantly, but
Really?
these are smaller, like local consumer banking, mortgage banking, wealth management and trust services. So
well, of the three that failed, I mean, those
yeah,
aren't really necessarily local banks. They're definitely business banks of some sort, right?
I think it is a lynching of the big banks as opposed to some of the smaller ones. I think some of the smaller ones are a lot more they have to be a lot more intelligent about how they do things. Whereas I think some of these big banks, there might have been this complex philosophy of like we're too big to fail.
Hmm.
I think there was some of that going on, and the government was putting out such cheap interest rates, and somebody had to buy it. Who had the most capital to buy it? Those big banks did. And so then by being the biggest buyers of those trash junk bonds, they were the ones to lose the most.
Hmm. Yeah, and so I think there's so like kind of what you were saying is people feel like there are alternatives, right? And you know, I don't know if businesses are actually buying these treasury bonds, you know, that are at these high rates, or at the very least, you know, you could put it in a stock market like a bond ETF, or I don't know what all the different
Hmm.
ways you can, you know, increase your exposure to bonds. I think it's because of that, because there's might be easier access. I've been seeing a lot of things also that said deposits are down, right? And so like the banks could, if people were depositing a lot of money, they could, you know, kind of hedge their previous things by buying more government bonds, and then they'd be, you know, a little less
Hmm.
lopsided. But no, it's funny. But I think you're right on the small banks. I'm personally not concerned with my local credit union. That's where I do all my
Yeah.
banking.
Me neither.
I don't think they're going to fail. That would be, yeah, it'd be wild. But I, you know,
Yeah, I use
Yeah.
credit
sad,
union
man.
also, Matt. I'm not
Yeah.
too concerned either.
I also do the credit
My
union.
bank
Yeah.
actually did go through a consolidation a
Hmm.
couple years ago in Wisconsin, so that was kind of interesting. But I haven't had too many issues since that happened. I'm not going to say what my bank is because I don't want to put anything scrutiny. There were a couple of credit unions that did consolidations
Interesting.
in the state that I'm originally from. So it would be difficult to figure out which one I'm talking about. But yeah, it's interesting how even the credit union has their own versions of consolidations as well in certain like regions and demographics, locales, essentially.
Hmm.
Totally.
So, yeah, it'll just be interesting to see. I don't know, to continue to watch this play out. You know, I wonder if, like you said, Brandon, there is this kind of sense of too big to fail, and I wonder. I didn't look too much into this. You know, J.P. Morgan Chase purchasing, um, you know, First Republic, but I think I saw a couple of people mention that it might have been not quite with regulation, like a bank that big should not have been able to purchase a bank that big.
Why
Well,
were they allowed to purchase them but not SVB? That's my question because they wanted to buy SVB too, but
well,
they weren't allowed to by the
yeah.
FDIC. because of
Well, yeah, and
Yeah.
monopoly conditions in the market.
Yep. Yep.
yeah, it was very strange. That's the other thing too, because there's definitely that dynamic at play. Because of the three banks, you have SVB, Signature, and now First Republic. First Republic, as far as I can tell, was not directly related to crypto in some way, but both SVB and Signature were crypto banks, and Signature particularly. Still, people are saying that it doesn't show evidence that that bank actually failed. They
Yeah.
just shut it down.
Yeah.
So that's a
But
strange case too.
that's because the executives were doing nefarious things to manipulate stocks.
Oh, were they?
Yeah,
Because I don't know. I think some people think
they were selling all their shares.
maybe, but I mean, it still seems a little suspicious.
No, I
Agreed.
saw a report that I don't know who put out the report, but there's a report I think that I don't know if it looked at all of them or at least maybe it was just Signature, just Silicon Valley, but the report said that like crypto was not related to you know the failure, like it was other factors, like it was not contributing. So yeah, it's kind of wild to see. Um, yeah. Anything else on banking? I thought that was a big topic to touch on because it's kind of been this ongoing process.
Yes,
I'm
definitely the
interested
biggest
to see
topic.
where it continues, but
It's a huge topic, and it's going to continue to evolve this year.
yeah,
The government has the government finds new ways to shoot itself in the foot every day lately, and this is just another way that they've been exploiting some of these players, and there's others that are overextended. It's just going to depend on who, and the other question is who's J.P. Morgan also going to be allowed to buy this year? They're not done. They're not done buying. There's
Yeah.
blood in the streets, and J.P. Morgan knows that that's time to buy. So, yeah, let's see what
Mhm.
happens.
Yeah, it does. I mean, people are
Get
saying
your popcorn.
it might be the case that the Fed is more than willing to kind of hand some of these somewhat smaller banks, consolidate them into the hands of the big players. So, I mean, that's not a good thing. That's definitely not something that I would support. But it is hard for me to really look at these bank failures as, the little guy getting pummeled. It doesn't seem to be the
What I
case. But
what I get frustrated by is seeing influencers like finance influencers on YouTube then going in and telling people get your money out of small banks. Small banks is where you are going to get caught holding the bag, and I'm like, why though? Like if you're in a good like I like to think in the Midwest here, things are a little different, but it was just kind of funny how I'm like, really? Like, you really just want me to go to Chase just because a couple of other banks just completely went kaput? Like, I don't think that solves the
uh,
problem.
yeah. And there is something to be said though. And I think I don't know if it's Balaji or someone else was pointing this out that there's really as a consumer, and this is the problem, right? Think of the economic incentive. If your bank doesn't go under, you don't get rewarded for continuing to bank there, right? I mean, you get your 0.1%, if that, right?
yeah.
But if your bank does go under, then it's really bad, and you have to wait for your funds to get back and stuff. So it is weird because you do have these economic incentive to like, if you are worried about your bank, to pull out money from the bank, right? There's no incentive to stay, because then you're just going down with the ship.